Good morning, it's Harvey Jackson. Just going to get into seasonality of grains and with the possible end of the Iran-Israel-US conflict. We'll just have to see how this all plays out. But if you just look here, you can see the seasonality of grains. And if you're going to use the 30-year and the 15-year November canola timeline, April to July right here. So you're basically saying right in the middle here, when the market tends to fall. And been watching for this and looking for some of the technical indicators on the charts, and we're definitely looking and feeling like we've tipped over here. So lean in, get some more sales made. And take some protection as this market is looking and feeling like it's going into this seasonal slide. But we still have weather in front of us, and we still have delayed planting. But here's the scenario that I would point out on wheat, or spring wheat as well. That's a seasonal slide as well going into December. So same thing. Look at making sales on these crops. I would even be looking at the soybeans if you've got as well. Corn does not play that same kind of game out as as drastically as these other two. But so Iran war. So this was just a clip. Trump pauses Project Freedom in Hormuz. Sources say deal to end war is close, and that's the Pakistani basically saying that we're getting close to the end of the and possible agreements here. Iran foreign minister meets Chinese counterpart. And China has urged the U.S. and Iran to maintain the ceasefire, and conflict threatens Chinese energy imports. So there could be some pressure from both sides. Besides, Trump scheduled to meet China next week. Palm oil rally seen continuing on the biodiesel demand. So this is a story that was posted before all of this, but I do believe that this is still going to be a fact that's going to put a lot of support underneath the market, as the veg oils are going to be looked at as a energy security kind of a platform. So just reading the highlighted areas, refined fuels like diesel and gasoline rose more sharply than crude oil after the Iran war began. I've been highlighting that quite a bit. As a result, the spread between fossil fuel and palm biodiesel narrowed, cutting subsidy requirements and in some markets making palm biodiesel cheaper than fossil diesel fuel. Rising energy prices prompted Indonesia to reinstate the B50, which is a 50% palm oil biodiesel put into blending with regular diesel. Biodiesel mandates are being increased in other countries like Malaysia, Thailand, and others. Then the highlighted area down here, the U.S. has announced its long-awaiting jumbo diesel program for 26-27, and has expected lit a fuse under some soybean oil futures. Higher edible oil prices are leading to demand destruction in key consuming countries like India, where stocks have fallen and imports will need to be stepped up from June, he said. So that was just another article that caught my eye, is just this 30-year bond. And the highlight here that I would say is probably important to understand is like 17% of the U.S. Treasury is made up of 30-year bonds. So as this keeps on coming true, getting to the 5-year bond or 5% interest rate, it could be, if you were to hold something to maturity, you're gonna make a lot of money. But that high interest rate is actually gonna hurt a lot of the country for sure. Just back onto minutes, I just like this graphic, and I want to give credit to bushel per acre. But just some of the just numbers in the drain, like there's, the highlight here is $1.2 billion of assets base, and the critical liquidity deficit is $740 million. Unbelievable how you can get to that point, I guess, at that point. To the weather, you can see lots of frost and frost warnings. And you can see that temperature gradient there as it reached down close to some of this key areas of Kansas wheat. Now, is Kansas wheat going to actually have a rally here with the soft white winter or soft white wheats, the other winter wheats that are grown? No problem in those areas, but the Kansas City wheat class has got the most trouble. Here you can see the temperature is quite cold, and it just keeps on getting a bullseye here. So we'll see if there's going to be any damage there. Just moisture accumulation. Yeah, there is in all the way out to the 20th of May. There isn't a whole lot in some of those key areas. Looks like you're going to get some over there. That's where another key area where Kansas wheat is grown. Canola is down 1560 at 741 on the November, and the on the July, and November is down $16.10 at 746. Rapeseed is down 875 at 516. Soy oil is down 1.8 cents at 75.12. Palm oil is down 135 ringgit at 4,546. Crude oil is down $9.81 on the West Texas. The Brent is basically holding steady there at 114. Now I'm just wondering if I've got something going on wrong there, if it's not trading or something. But the diesel fuel futures are down 30 cents a gallon at 373. So the war premium is definitely coming out of the fuels there for sure. Soybeans are down 7 cents. The Minneapolis wheat is down 10, and your hard red winter wheat is down 16 and a quarter. Chicago is down 15 and a half, and your Canadian dollar is basically flat. So you can see here we're touching that short-term moving average. Looks like we're crossing over the slow stochastics. So if we're going to follow seasonal, this is a sell and short the market here. You may want to look at January, especially if we get delayed fall and delayed planting here for this seasonal short here as well. Here's your European rapeseed, just hovering above the 10-day moving average there. But you can see in the chart, they're all looking like they're going to cross over on the slow stochastics here as well. Your soybean futures, 2 days of red, and big long red candle on the palm oil as well. Here's your crude, would be matching some of these other long candles. That was the end of the war there as well. Another end of the war here. Now I don't know how many times at the end of the war we're going to have, but it seems to be a little bit more promising as there's more and more pressure on both sides. Here's your diesel fuel futures. Still would be looking at possible buying when you get in that 340 to 320 area for additional supplies. I would love to see it go past there and back down to fill that gap at the 280, but I think that might take some time to fill those reserves. Gasoline right at the previous highs that we made here, but it also crossing over its 10-day moving average just in one day. Canadian dollar still going sideways. Looks like it's actually going to try to get back to those values there. It does have momentum on the way up for sure. That's what it definitely appears anyway. US dollar directionally, it looks like it's going down. That just makes their products that they sell a little bit more affordable for sure. So crude oil and wheat. So this is just the area that one of the first articles we're talking about the 30-year bond rates. Quick look at wheat. Been trailing off for a few days and just crossing over the short-term moving average, or the slow stochastic, and this is indicating a sell on seasonal. That's not to say that we don't get a seasonality of the market or a weather scare, if there is one, to bring it all back here. Here's your Kansas, crossed over that 10-day moving average, and slow stochastic so you got two indicators at this point. And your Chicago wheat and your milling wheat and corn futures, one day you just hit that short-term moving average and push your slow stochastics